Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools Jason Hall and Tyler Crow giving a 1 to 10 rating to Gas Freezer Chart Industries, ticker symbol GTLS. If you're wondering about the ticker like I was, Google wasn't super helpful, but ChatGPT says it probably stands for either Gas Technology and Life Sciences or Gas Technology Life Systems. Ooh. All right, let's move on to the business. First, we'll rate, the strength, including industry and competition. A 10 is invincible. A 1 is hopeless. Tyler's giving it a 7, and Jason's giving it an 8. We'll start with the lower score with Tyler.
I mean, cooling things down is a pretty good business overall. There are a lot of conventional end markets like industrial gas companies, cryogenic storage tanks, food and beverage companies. And on top of that, there's a lot of emerging end markets, liquefied natural gas, hydrogen or liquid hydrogen for energy, carbon capture, data storage cooling. There's a lot of kind of interesting trends for making stuff really cold out there. The diversity of end markets gives Chart a significant installed base, which means aftermarkets, parts and service, a nice high margin business. And I think it gives it a nice long-term tailwind with the combination of those two things. I think the downside is it is still a cyclical industry that's going to go a lot on backlog and orders and things like that. And it's extremely competitive industry with a lot of high fixed costs. So when, sales do slow down, it can hit the bottom line pretty quickly.
Yeah. So first I'll correct you. So GTL, you got to know the industry lingo here on, and that's gas to liquids. So GTLS is gas to liquid systems. So that's why they snuck that ticker in there.
Nuts.
Yeah. So
Darn you,
I gave it
and Google.
There you go. That's right. It will hallucinate, as we know. So I came down with an 8, a little higher than Tyler because, again, I love everything he said about the expanding array of industries that it services. And those tailwinds, I think, are great. Those tailwinds also, I think, are going to help with some of the cyclicality. But the real reason I gave it an 8 is because they've done such a good job of bolting on acquisitions over the years and wringing out costs and making a stronger per share value creating business. We're seeing signs of that with a big acquisition they just made a couple of years ago. We'll talk more about later.
All right, let's talk management. A 10 is Warren Buffett. A 1 is Homer Simpson. Tyler gave them a 7. Jason gave an 8. We'll start with Jason.
Yeah, I'm going to try to keep this brief, but there's a little complicated story here. Jill Evanko is the CEO now. She's done an exceptional job. She took over as CEO in 2018, kind of in the middle of a tumultuous period. Her predecessor was recruited away from Dover in 2016, as was Evanko. Bill Johnson was his name. He came in as COO to replace Sam Thomas, who had been the CEO for a long time and had been very successful in building the company. He made it as CEO like 13 and a half months before he was fired with cause. The company said nothing about exactly what happened. Evanko was immediately named CEO. And the thing I want to stress is that Evanko has done such a great job of continuing the history of being a really good acquirer, bringing businesses in, wringing out costs, driving per share value. And it seems like it's the board maybe has driven some of that too, even though Evanko has been at the company longer than all of the board members except for one. She's been incredible for shareholders.
I gave it, like I said, a 7. I kind of struggle with this one because most of its leadership is relatively new. Like 5 years is not the longest time to evaluate a company. But as Jason said, I think Jillian Evanko has done a great job. Margin expansion, really increased inventory turnover. So managing a much more efficient business. I don't really have a lot to say otherwise for the rest of the team because they're all relatively new.
Financials. A 10 is a fortress. A 1 is yikes. Tyler gives them a 6.5 and Jason gives Chart a 7. We'll start with Tyler.
So recently, leverage has ticked up quite a bit. After it acquired gas handling products and service company Howden's in 2023, it was a $4.4 billion cash transition. And when you make a cash transaction, you're probably raising debt to do it. This was the case here. It has subsequently paid down some of that debt, which is great. And management intends to continue reducing leverage back down to pre-acquisition days, but it's still sitting with debt. And one of the problems is if you're sitting on debt in a cyclical industry and the industry turns on you all of a sudden, it can be much harder to pay it down. I would say cash flow right now is good enough that it should happen as planned, But like I said, if for some reason we were to see some cycle turn in this, it could go sideways a little bit.
Yeah, count me among those who were concerned when I saw how much leverage that Howden transition would take. They bought a business that was about the same size as the existing business was. Those kind of transformative deals almost never transform the business in a good way. But basically, what management said would happen is happening. The balance sheet is delivering as cash flow stabilized. The Howden business they acquired, a lot of it is services based, and those revenues are more resilient when we go through the cycles of downturns. So I expect that we're going to continue to see the balance sheet get stronger.
Let's talk valuation, Jason. How well will Chart Industries stock do over the next 5 years, and how safe is it? 10 is a sure thing, 1 is a lottery ticket.
So my safety score was a 6, and I'm expecting 10 to 15% returns. That's roughly what it's generated in returns over the long term. And despite the work to make it less subject to cyclicality, their aftermarket revenue has grown a tremendous amount, and that business actually usually does better when a downturn happens because companies have to spend more for maintenance and service. It's still a cyclical manufacturer, but I trust management to keep de-risking the balance sheet. I think there's a lot of upside, as we've talked about, with the growth tailwinds and the good job they're doing with cost controls and growing those margins. Long term, I think the profile is kind of that low 12 to 13% returns, probably what we're going to see.
So I also gave it 10 to 15% returns, but my safety score was lower, is at a 4. Since its IPO, it's produced 12.4 annualized total returns. And, I don't think there's any big reason to think that's going to change. Perhaps these new markets will accelerate growth over the longer term. However, if we're talking over this, 5-year period, this is a lumpy business, volatile, like I said, high fixed costs. So a downswing can really impact margins quickly. It's had multiple drawdowns of more than 65% over the past 10 years to give you an idea of like the volatility. And if you're on the wrong side of it, that can, drastically impact your total return over a short period, like 5 years.
Move on to top it. Tyler, is there a company in Chart Industries space you like better?
Relatively close. It's ITT. Basically, they are a specialty pump and brake company. The pumps is kind of the closest thing to Chart Industries. When you hear pumps, it's not like sump pumps for your your fridge. This is like specialty harsh environment stuff, working in like oil refineries, liquefied natural gas facilities, and a lot of kind of the pumps that would be used to move product in a system that Chart Industries is making is something that ITT would make too. A little bit better valuation and a little bit more consistent on the returns profile.
Yeah, so Chart is a little bit unique in its space. It's been able to grow because it's made a lot of bolt-on acquisitions. A lot of the competitors are privately held and they're small. A lot of opportunity for consolidation. Howden it acquired from a private equity business. So I would say within its industry, there's not really anybody that I like better. It's been really good at creating shareholder value.
Thank you to both Jason and to Tyler. They've given Chart Industries an all right overall score of 6.9 out of 10, short of that 8.0 that would force me to own shares. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is an industrials company. Till then, Fool on.